Welcome into the Crypto Bunker podcast. Guys, a lot has changed in the past week or so, and I wanted to get into it. First, I want to say none of this is financial advice. Please consult your financial advisor before making any investment decisions. None of what I say is a endorsement of any security or asset to invest in. So, with that, I wanted to get into this clip of Janet Yellen because, as we know, with the bank runs that have been happening, again, a lot has changed. Um, and I've always been against having your money in a bank. I've always been um, more pro to having your money on a ledger or having physical silver or gold in your possession if you can. Um, so let's just see what is happening here, because what I believe happened is that the banks have now been nationalized, which in my opinion is inflationary. So let's see what this clip says.
Start with some of the banking issues we're dealing with on it. Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is
And
your
we made
plan?
that determination
Right. So
for
what
these
is
two
your
banks.
plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
That is happening because depositors are concerned about the bank failures that have happened and whether or not other banks could also
No,
fail.
it's happening
And
because you're
it's,
fully insured no matter what the amount is if you're in a big bank. You're not fully insured if you're in a community bank.
well, you're not fully insured. And
You were at Signature and
big,
it just barely met that threshold. You were at Signature.
well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks. And that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system, and we took these actions.
So there's a
to
special
discourage
assessment that's been done
contagion.
on community banks in my state and all banks across the country. Was there any discussion that that special assessment would only apply to the larger banks, or was it always assumed the special assessment would cover every bank, including rural banks in my state?
I think, I'm not certain what the rules are around that. That's for the FDIC to determine.
It has been reported publicly that SVB had a large number of Chinese investors that are there, including some that were companies directly connected to the Chinese Communist Party.
Okay, guys, I'm going to leave it there for now. But basically, what is happening here is that we have a bank run that obviously occurred. Um, and we had, so now basically what is happening here is that small banks are at risk of bank runs. There's no reason to keep your money in a regional bank if you're not sure if you're fully insured over $250,000. Obviously, if you're under 250,000, you're fully insured. Um, it's not necessarily something to worry about, although I don't think I would have that much cash as an investment in a bank or just I mean, you're basically relying on that bank to be making good loans and making good investments because obviously, as you guys probably should know at this point, that, that money is not yours. It's not like they have, like a safe of green paperbacks in the back somewhere or even digitally that will allow you to have that. Um, so basically, where we're at right now is that people have all of a sudden jumped into Bitcoin, and I know last video I was pretty bearish, and that was because the Federal Reserve was saying that they were going to raise rates higher. Um, and it really looked like we were going to lose access to the banking system. That actually has somewhat resolved in terms of losing access to the banking system for crypto, like USDC. Over the weekend is now banking with BNY Mellon instead of Signature, Silicon Valley, those places. So that has repegged. Um, if you look at the USDC chart, obviously we can see that it had a pretty big spill here, which is pretty scary. But, everything's good now as far as this week is concerned. It has repegged. And so even USDC against USD repegged. So there was a little bit of a scare there, and that's understandable for, what was happening. But everything is back on track in terms of that. So that's good to see. That's healthy. We do see like Ethereum and Bitcoin breaking out pretty big time. And I mean, what I would say is this is probably a bear market rally, like if I'm being rational. And we could possibly see up to the 150-week SMA touch there and the 150 touch there as well. That also correlates to the monthly SMAs. If we look at Ethereum, we have, again, about 2,300 on the 20 SMA, and then Bitcoin, same thing. So really both of those averages line up to be about 34,000 Bitcoin and 2,400 Ethereum. But what I wanted to get to as well is just a few other tweets probably that I've been tracking, because we have this guy Balajis. Okay, he wrote the book The Network State. His jobs, he's the former CTO of Coinbase. He is a former, I think, venture partner at Andreessen Horowitz. It could be that he's still there, partially. I'm not sure, but he's had some high associations. He's a VC. He backs a lot of like crypto projects. He backs a lot of just tech startups, and he's rich, type guy. And he basically, I mean, I wouldn't consider him a doom and gloomer type guy. He's not really in that fabric necessarily. But he now believes that basically the US is about to enter into hyperinflation in the next 90 days. And he believes that Bitcoin will hit $1 million within those 90 days. And again, this is coming from someone who's pretty well, stable. And he just thinks that, if you look at, I mean, you can look at what happened in Weimar, Germany, with the gold mark here. Obviously this happened, within like a few months when it went from 10,000 to 1 million. And so he basically thinks that now that we're in the digital age, this will happen with Bitcoin instead of gold this time. I still believe that there's a possibility that could happen with gold. But not necessarily to this degree, although again, I do think that something like that could happen. As we can see with gold, gold is breaking out, looks even better than crypto at this point. It has broken out even on a monthly time frame, but I think it's better to look at the weekly on this one. Gold has broken out, and what I would expect here is potentially this is probably the top end of the range. Although again, I don't want to speak for anyone's decisions, but I mean, if you don't have like, I mean, what I would say is like if you have a retirement account or something, you know, maybe look at some funds like First Eagle Gold, Gabelli Gold Fund, Fidelity Select Gold, you know, VanEck International Gold Investment. There's like different ones like that that you can look at. But yeah, I mean, if even like, see, if you look at GDX, and I apologize for all the lines, but even if you look at like GDX here, um, I mean, what you can see is like we sort of have formed an uptrend here, and we're running into some pretty strong resistance up at this 30 level. But we broke through it, sort of, and so I mean, what you might be able to expect, I think, for the miners is probably a rally up to 36, which is a pretty good trade. Maybe a retest of 32, 30, and then an explosion, potentially if gold does explode as well. Silver is lagging behind gold, which is fine. That's usually the case, but this candle is a good looking candle for sure off of this, sort of forming this new uptrend once again. And so, you know, where I would say that we're at with gold, and again, remember I had talked to you guys about, and I you know, apologize, I guess, I don't know, but I basically said this was the top, and I said I called the gold top, and I was like, you know, prideful and hubris and all that you're not supposed to have. But then I was buying a lot more down in these levels. I wasn't like saying that you know, I mean, I was saying there was a potential that it would just come to, you know, totally drop. But when you run into this many weekly moving averages and you have a bullish cross like that and you land on the 20, you know, this was a great buying opportunity here. So I was definitely buying this. I was selling this, and then buying this. So, and honestly, I might even buy this now because of what's happening in the world. Let's go back to Balaji here because I think it's important to highlight what he's trying to say. So, I think this is the tweet. She said the bit signal. How do you ring the fire alarm on the internet? How do you show it's not a false alarm? I'm putting up the bit signal, 1 million Bitcoin to alert us to the stealth financial crisis, 1 million in Bitcoin. 1,000 per tweet for the best 1,000. Reply with your charts, graphs, stats, memes. Bring attention to what's happening, and they're about to print 2 trillion to hyperinflate the dollar. And again, this is not like a guy that is usually like this, so I don't know. You know, I don't want to speak for him, but you can actually look on Robert Breedlove's. You can look on Robert Breedlove's Twitter to see his Twitter Spaces he did last night. It wasn't great, to be honest. Like he was sort of scattered. I heard he did a speech somewhere in the world. I won't mention where, but where he spoke about sort of a hyperinflation scenario in the U.S. He was telling people to get out of the U.S. immediately. Things that were really scaring people, causing people to have a little bit of panic and feel sick, which is understandable. So let's look at this. Okay, so the banks are insolvent. We should have learned to distrust bankers after the 2008 crisis. Back then, they used complex language to hide the simple fact that the mortgages were bad. Today, they do it to hide the fact that the money is gone, not in one bank, but in all banks. And this is true. I mean, it's a fractional reserve system, but the thing is, what happened was let's look at some charts and try to say what happened here. So what happened is let's look at a long-term bond ETF here. So basically what has happened here is that in 2020 and 2021, the banks were, or the Federal Reserve was telling people that they were, you know, not even, okay. we can actually say all the way back to '08, really, right? And that maybe that's why we crashed all the way down to this level. But we can say that basically the banks have been investing in bonds throughout this entire thing. They've been investing in long-term bonds because they thought that what the Federal Reserve said was, bond basically, was a good word, that they were saying we're going to keep interest rates low. And so the Federal Reserve kind of set the banks up for this failure. And some say it's to bring in a central bank digital currency. We can get into that later potentially. But what we can say is that right now, all these banks are underwater because they were buying throughout, really throughout this period when they were getting an influx of cash from the printed money that happened after COVID. And I know this is a little bit complicated, so just stay with me. Hopefully, this is stuff that I only understand because I've done thousands of hours of research over the past 3 years. So if I'm going a little bit, quickly and scattered, then I apologize. But it's just a lot of information. So basically, the banks invested in long-term bonds. Now they're underwater, and they either have to sell their bonds at a loss and go insolvent, or now they're being backstopped by the Fed. So the Fed is actually buying these bonds at a 70% discount to keep the banks alive. So now the Fed basically owns the banks. The country, owns the bank. The government owns the banks, and we have mid-size level banks who are now worried about unrealized losses, and they're actually asking for 2 years of backing from the Federal Reserve. There's been a petition that has gone out from the banks, from the mid-size banks, mid-size regional banks, places like PNC Bank, that are now asking. I'm not saying that they're on the list, by the way. I don't know that, but they're basically asking to be backed fully by the Fed and the government now, because they don't have the money. So now, like, everyone knows they don't have the money. And what people are doing is, like in that clip that we showed earlier, they are now taking their money out of those banks and they're moving it to JP Morgan, Citi, Wells Fargo, Bank of America, the big four, whatever, five it is. Because those are guaranteed to be backstopped, now, or whatever, because they're too big to fail. The whole country would collapse if those failed. So you basically know that your money is guaranteed safe there. So a lot of these businesses that bank with small banks locally are having to make a decision to move their money. And what's happening, I think, is a lot of them have decided to buy Bitcoin, and gold and silver. So this has really woken up the population. And again, I think the last video I made, this was not the case. Like, none of this had happened. So we had a bank run on Silicon Valley Bank. We had Silvergate fail. We had Signature fail. Silicon Valley Bank fail. And now they're fully backed by the government. At least Silicon Valley Bank is. So this is inflationary because, what happens is that we now know that the banks are all insolvent, and it's like, basically they can make loans. If they're backed by the government, they can make loans to anyone. It's just inflationary. There's no way around it. People say it's deflationary. I don't see it that way. I see people who invested in a bank, because that's what you're doing. You're an investor in a bank. If you have over $250,000 in a bank, you're an investor in a bank. If you have that, you deserve to lose that money, which then is deflationary because you invested in a faulty company that you didn't do enough research on and you didn't understand how it worked. So you deserve to lose that money. Now, if you fully backstop all of that money that the people were deserving to lose, that's inflationary, because then the money is guaranteed. People feel like they can spend. The government has their back. So it's the same situation as what happened in 2020. Okay. So if you can see kind of where we are at now, or where we were at there, right at the 200 week, okay, moving average, and where we went to the top, you know, I don't doubt that that's possible to happen again. Now, where would that take us? That would take us to about $340,000 by April 2024. I don't think that necessarily will happen. But what I'm saying is, you know, it could be a little bit longer time frame. I mean, let's be honest. But I mean, if we're looking at where we are in the cycle, you could even say we're here too. That might make more sense in terms of the timeline. In fact, I think it probably does. And this would take us out to February 2025, which, yeah, that makes more sense. Still about a $300,000 if we didn't reach the top. Obviously, the top would be around 500,000. But that's just going by the log channel that we're in. So again, this is the log channel of Bitcoin, classic, buy at the bottom, sell at the top. So we were at the bottom, you know. So, I mean, like I said, I have been dollar cost averaging into Bitcoin. You know, Balajis, basically what we can see is that unrealized gains on investment securities. This is the bank's issue. Okay. This has essentially never happened this badly. As you can see, more unrealized losses. So let's get to Balajis' thesis. Let's see if he posts it in here. Yeah. So he's saying regulators knew banks were insolvent but didn't notify depositors. Why was this banking crisis such a surprise? Is it really your job to do diligence on your employer's bank financials? Aren't you paying regulators to do that? Well, technically, probably not. Like I was saying earlier, you're an investor in a bank. But and that's why if the bank goes insolvent and there's bail-ins and you don't get your money, you actually get equities of the shares of the bank based on the amount of money you had, because again, that's your investment. So you guys can read that, but yeah, I mean, it's crazy, right? Let's see if I can. Yeah, so hyperinflation comes very fast. The speed of hyperinflation takes people off guard. Cato made a table of 56 episodes. Prices in 1945 Hungary doubled in 15 hours. How fast will it be in the internet age? Buy Bitcoin, get your coins off exchanges. Printing is here, and you may only have hours. Now, obviously, he's being hyperbolic here, but they're trying to block the exits because basically they're shutting down. Again, like I talked about last week, they're shutting down random banks. They even decided to shut down Signature just for no reason. It wasn't even insolvent, and they won't even let Signature acquirers keep the crypto businesses. So they are trying to shut down your access to hard money. So let's see if we can go back to his profile and find the tweet. But let's actually watch this. I don't know what this is.
The record life. This is a major.
Really doubt that we're going to see an inflationary cycle. I can reassure the members of the committee that our banking system is sound.
Credit Suisse is down about 29%. It's another record low. This is a major bank, one of the 30 most important in the world.
This massive trillions and trillions and trillions of dollars.
Moody's Investor Service has downgraded the entire U.S. banking system.
Then what's been happening is people have been looking at alternatives.
Bitcoin absolutely ripping.
Take a look at what's been happening with Bitcoin.
Bitcoin is going to zero. Non-stop Bitcoin. Who cares about Bitcoin?
Madam Secretary, can we talk with you? Why won't you talk with us?
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best.
That's pretty good. Yeah, that was pretty cool. So yeah, basically what we're dealing with here is a banking crisis. And wow, yeah. Dan Tapiero is saying, sort of agreeing with Balajis. And I agree. People are on fire here. Let's get into it. You can watch the recording of what he said there. And remember what the Fed knew back in September, that its rate hikes had silently killed 300 community banks, and they didn't say anything about it. So it's insane, really. And the thing is that in 2008, people didn't have Bitcoin to run to. Ray Dalio also predicted the Fed would monetize the debt. They are monetizing the debt, and that's what this is. But it's now. They're doing it in most chaotic way possible. 100 insolvent banks get printed money. Who gets paid? First come, first served. Who keeps the value? Those in Bitcoin. So he's saying, buy Bitcoin again. Oh yeah. So here's the discount window. So as you can see, this is the most dollars they've had to inject into the banking system since, well, forever. Way more than COVID. Okay. So, I mean, this is hyperinflationary, and this is kind of why he said that this is what the Bitcoin chart is going to look like. It's like the same chart as the one he has here, right? So, it's weird. It's weird. I understand, it's crazy. It's scary, very scary. I mean, obviously, the next thing I wanted to talk about was just preparing. And the other thing is, let's see. Oh, wow. Bitcoin has outpaced traditional asset sectors such as technology and gold. It's gained 51% year-to-date absolute return, surpassing information technology, surpassing everything. Meanwhile, energy and crude declined 11 and 14. Yeah, Bitcoin's recent surge, obviously the U.S. Federal Reserve eventually ditching. So Goldman Sachs seems to be bullish. Yeah, so they're bullish Bitcoin. I mean, the thing is that I always said there was a possibility that when rates crashed, we would see this. So, this is like what you're looking at. Rates have crashed. This is the 2-year rate. This is the 30-year and the 10-year. So, I mean, is this a check back and then another rally? I doubt it. I mean, this is if we look at it not on the log scale, you can see that this is a trend line. This is a steepening trend line that was touched many times, and then it was rejected hard. And I talked about this before, and then I said it was going to crash, and it did. And so that is bullish for gold, and we can see that it might be bullish for Bitcoin as well. And some people are saying Bitcoin would act like a equity, like S&P 500, in this scenario where it would crash with rates, because again, rates crashing, that does not necessarily mean that stocks are going to go up. Right now it is, but in general, I'm not sure that will continue or not. because earnings will crater, especially with inflation. So, but the thing is that Bitcoin doesn't have earnings, right? So, the other thing to watch out for with Ethereum, Ethereum is doing pretty well as well in this environment. Obviously, Ethereum is like basically the Ethereum is sort of like the Federal Reserve itself, and Bitcoin is the gold that backs the Federal Reserve. If you think of the analogy that way, because Ethereum houses, the entire financial crypto ecosystem. And so, but again, there's no backstop. The backstop is just smart contracts and code, which is amazing. And Ethereum is now scheduled to ship the Shanghai upgrade April 12th. And also the Arbitrum Arbitrum layer 2 solution just came out and said that they're releasing a token. I was lucky enough to receive an airdrop. You can go to arbitrum.foundation to see if you're qualified, if you did use Arbitrum. I did talk about that, probably over a year ago at this point, to just try out these networks so that eventually you can get airdrops from them. It's estimated to be about around $1 per Arbitrum token, probably $1 to $1.50 based on other layer 2s. But Arbitrum is the most value locked, and so it's possible that it could be even more, maybe $2. So that'd be awesome. So yeah, like I said, I mean, rationally, I would say yes, this has broken out, and we're about to close a weekly above this sort of downtrend. I mean, let's look at it on a log scale as well. We can obviously see that it already sort of has broken out, even of that line, which is pretty impressive because it hasn't broken that yet. And that's the line from the top to this rally. And so we have broken out. I mean, this is a wedge, and there's no way around it. I know that I was bearish last time and maybe too bearish. I hope that I didn't scare anyone too badly. Obviously, my coins are locked up, so I wasn't able to make the mistake of selling, I guess. So, I would say Bitcoin, get a ledger, get your stuff off exchanges because it could get pretty crazy. Buy, storable foods, water, seeds, other things that you might need for a crisis situation because we are headed that way. Yeah, you don't need much Bitcoin if it goes to 1 million, right? So 0.01 Bitcoin is about $300 and or 270, I guess. And if it goes to 1 million, that will be 10,000. So it's basically a 40x from here. So yeah, you don't need much. You really don't with something like this that could potentially happen. So be careful out there. Hopefully you guys stay safe. Again, this is not financial advice. Hopefully you guys got something out of the video. If you did, please like, subscribe, and have a great rest of your weekend.